In this video, I'm going to share with you some of the mistakes that you want to avoid making if you're investing in the stock market. You have to understand that what I talk about on this channel really is to focus on the long-term goal of investing and just stick to the plan. Have a plan, stick to it, and do it long-term. The common approach to investing these days that you see generally, is that people want instant results. People want to get that, they went from zero to hero in a very short amount of time. And realistically speaking, nothing can be built that would last long on a short-term basis. You understand that when there's different strategies to making money in the stock market. You can either choose to trade, you can either choose to do what they call investing. And investing is really, the idea is that you find reliable companies that you believe in on a long-term basis, you buy them and you stick with them, right? Unless something fundamentally changes. And when I say fundamentally, I'm talking about something in how the company operates that you believe may not be doing the service that you're looking for in terms of maybe price appreciation, whether it's dividend. If you see that is changing, then yes, you may have to change plans as well. But the important thing is that you want to make sure that you are investing for the long term. On the other hand, trading, you're literally just trying to time the market, right, with a certain amount of money. And this comes with a lot of emotions and honestly, a lot of risk as well. Now, I may talk about a bit of trading occasionally, but I always preach the long-term investing as something that it's much easier, especially for new investors and people that don't want to do this full time, right? It's better you just put your money in investments on a regular basis and let it do its thing. So in this video, let's talk about some of the common mistakes that people make. All right. The first one that I already mentioned is trying to time the market. It's very easy to want to time the market. It's very easy to want to, sit on the sidelines, have cash waiting for that perfect moment to get into the market. When in reality, there's never a perfect time. The economy is so complex. It's a complex machine, actually, like they call it. And there's so many variables, there's so many factors that play into what affects the stock price. And the way you want to approach this is, how do you mitigate trying to time the market? The best thing is find a diversified fund, mutual fund, index fund to invest in on a long-term basis. Now, don't get me wrong. You may be able to get into single stocks of companies if you choose to invest in individual companies and make much more returns, but the risk is also very high. And your ability to put a lot of money into a single company is also much minimal. I mean, you want to avoid putting majority of your portfolio in one company, because if that company goes bust, well, your portfolio goes to zero as well. And that's something you want to avoid. The second mistake I'd like to share with you is believing that you can hold a company forever. This is something that I have to actually caution myself about. Understand that majority of the time, no company lasts forever. Yes, there's some companies that have existed for 100 years plus, but the truth about it is that as the management changes, as the environment changes, these companies tend to operate differently. And that means that their performance will change. And you don't want to be caught in the mindset that, oh, this company, you're going to hold it forever. Rather, the mindset that I have to hold is, if I am choosing to invest in single companies, single stocks or single companies or specific companies, my goal is to make sure that I can hopefully keep up with them. And not all of them will do well. You have to understand that some companies will lose money, or in this case, some stocks will lose money. Some will gain a lot of money, right? And your goal is to stay in tune with those companies on a regular basis. Try to keep up with their earnings, try to keep up with what is going on in the environment, try to see if you can continue to hold on to them. If that is changing, then one of the few things you can always do is maybe you can, while invested in that company, you can try to maybe put a limit as to how much you want to lose, all right? So, for example, if you're up 10% on a company and you feel like, okay, well, I'm already up, I don't want to lose anything less than more than that, maybe you want to sell it and get out. But let's assume that you believe in a company and you think you can still hold on to the company for years to come, then maybe you can set a limit to how much you want to lose. Maybe it's 10%, 20% you want to lose, or you're willing to lose on it for the time you're waiting for things to change. Then maybe put in that limit order, or the stop loss in this case, where in any reason, if for any reason things start to go downhill, you're able to at least get out without losing too much. Now, like I said, I have to caution myself as well, because sometimes you fall in love with a specific company too much that you forget to, you kind of turn blind eye to some of the things that they are doing incorrectly, and that could cost you a lot of money. So that's something to watch out for. My next point is thinking you can control the market with our emotions. And you always see the headlines, oh, the Dow dropped 1,000 points, oh, Dow went up 5,000 points, oh, all these headlines, they're there to really make us very emotional. And if you are not putting your emotions or putting it under control, then you're likely to react to the market. And this is where you see people, for example, sell when they're not supposed to sell, or not buy when they're supposed to buy. And this is something that you have to caution yourself on. You have to understand that there's a lot of this. The process of investing is all about psychology. And if you understand the psychology behind just investing, then you're likely to do better and you're likely to make more money over time, because you have your emotions under control. But if you let your emotions control what you do and how you react to the news and the headlines, then you're likely not going to do well in the long term. Advice that I have for you is understand that investing is one of the easiest ways to make money. It's so easy, especially if you find ETFs, mutual funds, index funds that you can put your money in, and you just consistently invest. So you automate it, you let it, invest every week, every month, every quarter, whatever works for you. And over time, the stock market will always do its thing. But one thing I want you to know is that a lot of times people don't have the patience for the market. And this is something that, it makes me smile when I see what I see nowadays, right? Because everybody wants to get in, make money. And don't get me wrong, we all like instant gratification, right? We like to put our food in the microwave and warm it up in like a few minutes and it's hot. We want to get things done now and see the results now. But sometimes investing, especially if you are trying to build something that will last a long time, you need to have the patience and you have to be consistent and diligent with the process. I just wanted to share this with you. If you have found value in it, please don't forget to drop a like on the video. Don't forget to subscribe to the channel, and I'd love to see you in the next one.